Hello and welcome to Samriddhi, your companion through your trading and investment journey. In today's video, we would be discussing the risks and benefits associated with futures and options and unveil all the secrets to understand why some traders become a millennial overnight by trading in FNO while some get bankrupt doing the same. If you also want to earn profits through futures and options and safeguard your losses, stay tuned to the video. The most important benefit of futures and options is that it is a hedging product which helps in managing risks of your portfolio. In our last video, we discussed about the origin of futures and options and explained them thoroughly. If you have not seen that video, please find the link for the same in the description box. Do watch the video because it will help you understand this video in a better way. Before you start to trade in futures and options, it is important for you to understand that it is a very complex product. And without knowing its nitty gritties, if you start trading in them, then the chances of making losses would be very high. The second most attractive feature of futures and options is that it is not just a risk management tool, but a profit generating tool as well, through which you can earn a good amount of money. By using FNOs, you can create not just hedging strategies but speculation strategies as well. The third and the most attractive features of futures and options is that brokers give you a lot of leverage to trade in FNO. Even if you have 10,000 rupees in your pocket, you can buy stocks worth 1 lakh rupees. With very limited amount of capital, there is a possibility to earn a lot of money with FNO. And the most importantly, you can make money through shares only when the market is going up. But with futures and options, you can make money even when the market is in downtrends or it is sideways. If there are so many benefits associated with futures and options, then what is that makes it so dangerous? Before you start in futures and options, it is important for you to understand that it is a very complex product. And without understanding the nitty gritties of it, if you start trading in it, then the chances of making losses is very high. Derivatives are basically a zero sum game. That means one person's profit is other person's loss. If you are earning profits, someone else is making losses. Or if you are bearing the loss, someone else is making profits. And it depends on your skills, risk bearing appetite, discipline, and experience to decide whether you would be on the profit making side of the trade or on the loss bearing side. The second most risky side of FNO is that it is a very leveraged product. That means even if you have 1 lakh rupees in your account, you can buy shares worth 10 lakh rupees. But what's the risk in it? Suppose you purchased Yes Bank shares when it was trading at around 40 rupees. In 1 lakh rupees, you get 2500 shares of Yes Bank. Now, the price of Yes Bank shares appreciated from 40 rupees per share to 50 rupees per share, and you make a profit of 25%. Your portfolio value increases from 1 lakh to 1 lakh 25,000 rupees. 25,000 of profit from an investment of 1 lakh is a very good amount. On the flip side, what if the share prices fall from 40 to 20? Your portfolio value will decrease to 50,000 from 1 lakh. You should have known that stock market investments are subject to market risk. But when you trade in shares, the chances of your capital getting eroded is comparatively very less. You made a loss of 50,000, but no one is coming to you and asking for the money. It was your own capital, and the 50,000 worth of shares in your account might appreciate in future. And you can recover your losses. The clock isn't ticking, right? Because shares are floated, keeping the concept of going concern in mind. There is no expiry date of shares. Now imagine instead of purchasing shares of Yes Bank with 1 lakh rupees, you purchase futures of Yes Bank. You would be purchasing it in lots. With 1 lakh rupees, you can buy 25,000 share futures of Yes Bank. The share prices appreciated from 40 to 50, and you would be making a profit of 2.5 lakhs. Your happiness would be over the moon, and you would start boasting about your trading skills among your friends and relatives. And here we all get wrong. We don't earn profits in the share market by virtue of our skills. We earn profit because of the market movements. Our skills are tested in our risk management. If we can control our losses, profit would come automatically. Now, on the flip side, Yes Bank share prices fall from 50 to 25 rupees per share. On 25,000 shares futures, you make a loss of 5 lakh rupees. Your entire capital will be eroded and you get indebted for 4 lakh rupees. From where would you manage the funds? Friends or relatives? Because banks are not going to fund this. Thinking of getting a loan on your credit card? You know the interest rate? 40% per annum. And by this, you invite a spiral of debt in your life. And 90% of traders dealing in futures and options face similar consequences in the F&O market. And with this comes the third biggest risk of F&O, that is overtrading. When you had an overall capital of 1 lakh, why did you buy futures worth 10 lakh rupees? Maximum retail traders do it unknowingly and unconsciously. If the broker is giving you leverage, what's the harm in availing it? But we forget that there is nothing called free lunch in this world. You don't get anything for free, and in lieu of this leveraged amount, brokers would be charging you very high rate of interest. And once you get into this spiral, it's very tough to get out of it. And with this, an emotion of revenge trading would start developing in you that you need to recover your losses from the market. And maybe you would not be able to control your emotions and keep overtrading with the feeling of revenge for the market. But remember, stock market and F&O market are like an ocean. If the waves come and give you profit, you need to accept it gracefully. But without knowing how to swim, if you go in the depths of the ocean, the chances of drowning is very high. Futures and options are very complex products, and without knowing its features and its risks, you should not enter the F&O market. The people standing opposite to retail traders in the F&O market possess super specialized skills and technologically advanced softwares, and they are so well capitalized that they can move the entire market at times. For dealing in F&O, you need super specialized skills and knowledge and experience. Trading is very different from technology. In technology, you can create history through a single innovation, but in trading, your experience, discipline, knowledge, skills, everything matters. If you want to trade in F&O, first learn about it. Discipline yourself that you would not overtrade and you will not take unnecessary leverage. And without proper knowledge, skills, and discipline, if you start trading in F&O, you are simply gambling. And in gambling, it is the market maker which makes money in the long run and not the retail trader. If you make money in one trade, you would lose out in nine trades. So, my personal advice to you would be if you don't have the time to learn and understand FNOs, stay away from them. In our next video, we would be discussing how the future prices are calculated and discuss its specific features. We would learn how do the prices of futures move vis-a-vis the movement in the stock prices or index prices, and what all things you need to be cautious about while trading in futures and options. If you like this video, please hit the like button and subscribe to our channel. Please do share these videos with your friends and press on the bell icon so that you get notification for our upcoming videos.